Testing. Okay, all you party people, we have 1 minute till the market opens. It's Wednesday, August 20th. Here is the sleepover trade going into today. So this is the position I set up at market close last night. This is our infamous sleeper trade, or sleepover trade, overnighter. So looks like we're going to be the ES is down by 5 points. We're going to open up slightly down from where we closed, which is good for our trade. You can see the worst case scenario in this setup is that we have $45 worth of risk from here all the way up to the moon. But because of this magic bow, this thing should pop at the open, and we should instantly be into some sort of profit. We have 5 seconds. So let's just see where we wind up. There's the bell. Give it a few minutes to settle in. So the SPX is down 5 points at the open. And you can see how that magic bow has risen up like bread. Like dough, like money. Okay, so it's showing we have a profit of 20, about, I would probably say $20 right now. All the prices are settling in, so we don't really know yet, but there should be some sort of profit in there. 25. That little white number right there is our profit. So there's a couple things we could do with this. We could either take the whole trade off immediately. I saw $50 there. That's not too shabby. We're down 7 points now. 8. So if we continue down, you'll see this pink line here is our current P&L. We'll just continue to get into profit. The best case scenario right now is if we wind up here, we have 100 and let's say 100 to 120ish. In there. Worst case scenario is right here, where we have $545 worth of risk, but that's not really realistic because we have this hedge here. The pink line is what's realistic right now. So the worst case scenario for this trade is minus $45 here all the way to 0. But in order to get down there, we have to run through this profit. So I would just take the trade off here if that were to start to go down. And then on the upside, the same thing. We have $45 worth of risk from here all the way up. But because of that magic bow, you can see that the thing has popped up. It's showing let's say $30-ish worth of profit right now. I saw 47 there. And you can see this is still profitable all the way up here. Let's see, right there, at least right now. Right in there is where we hit break even. And throughout the day, this pink line will continue to raise up. So it's just a matter of, do we want to wait to see if we move down into here? Do we want to just take the profit right now? Or do we want to convert it into a look-ma, no hands trade? That's typically what I do. This is like the starting point for my usual daily look-ma trade. So we have 30... like maybe $40 of profit right now. And again, the numbers are still settling in. The market's only been open for 3 minutes. So these prices aren't totally settled in yet, I don't think. Probably about 640, 645 we get like the realistic settled in numbers. But you can see we're up to looks like 50 to 60 right now. We're down 12 points now. So I have an order in right now to take this leg off if I can get it cheap enough. And this is saying I could take it off for 20 cents right now. If I were to do that, it gives us this. It just removes all that risk immediately. Plus it boosts us up into a really good profit potential if we were to continue to move down throughout the day. It only adds $20 worth of, well, there's 2 of them, so it's going to add a total of 20 20 bucks times 2, 40 bucks to our total risk if we did that. So I have an order out there trying to work for $5. Take this off at 5. But if I could get 10, I'd probably do that. Let's see what else we could do. We could do something like this. This is a quick adjustment we could do. We totally get rid of that risk on the downside. We have this profit tent here. We can make up to $1,300, $1,400, and our risk goes to 125. That's a possibility. Let's see another one. What's this one? I want to do that. We could just take this whole unbalanced condor off, giving us a trade like this where we have a guaranteed profit of at least 30-ish bucks all the way up, and then we have this mountain here. We make up to 520. That's if we took the main structure off and left the hedge. And then here's another option. We can do something like that. This would decrease our risk to 20 bucks total. 10 or 20. Worst case scenario is 10 bucks. We have these two butterflies here. We have one structured out at 53.50-ish. And then we get rid of all that risk completely. And then we have this plateau that goes all the way to 0 where we can make up to 490. So what I'm probably going to do is, usually what I do with these is I turn them into look-mas. This is like just this kind of the setup skeleton structure for the look-ma for the following day or for today. So I'm going to see if I can get these off for, doesn't let me get those off for 10. I'm going to try to see if I can get these off at 10. So I'm going to say create duplicate order. I'm going to throw 10 out there. Okay, so that's working. And if that gets filled, that would give me a tent like this. And then I would just start to work my normal trade off of this trade. Have some built-in profit, and also have this super cheap or risk-free profit potential mountains to the downside. So it's 6:36, so the market's been on for 6 minutes now. You can see that our profit right now is showing to be around 20 to 30 to 40 bucks, somewhere in there. 42. So this trade is just sort of a simple, low-risk way to try to capture some money while you're sleeping, that I can also use as an on-ramp or a pre-built structure to get into my other trades. The best case for this scenario is if we wake up and we're down here under the tent. You can see we could make up to 110 right now, 120-ish if we were in this tent. And anywhere from right about here through here, if we open up or move into this whole range here, we can make instant profit in the morning. Best case scenario is in here, and it just tapers off as we get in here. The absolute worst case scenario is if we gap up or move quickly up into this area, where we just continue to fade off into the worst case scenario, which is 45 bucks, which really isn't that much. That's totally workable through the rest of the day. I could do a look-ma trade and overcome that $45 risk easily. And it's almost the same as just starting fresh. So this trade just gives you a just kind of a leg up, a head start into the position with minimal risk. I mean, the worst case scenario is I would put the trade on anyway the next day, and if it were to gap up here, I would still do the same, like the look mod that I do every day, except I just have $45, an additional $45 to overcome, which is, I think it's easy to do that. And the upside is that we can have a built-in profit into that trade, or we can just take the whole trade off and be done, like if we were to come down in here. So I'm just going to sit here and let this work for a second, see if I can get those at 10. If we were to try to get those at 15, what would that look like? We have a total risk of 75 at that. If 75, if we got them at 15 versus 65, so just add another 10 bucks. So maybe I'll go to, maybe I might go to 15. But right now it's showing 20. So I'm just going to wait for a few minutes. I'm going to pause the video and then I'll come back shortly. Okay, it's 6:43. So the market's been over for about 13 minutes. Here's where we're currently at. We're at 40 to 50 bucks profit. The SPX is down 12 points. And I'm trying to get 10 on this, but it's showing 20. What I'm thinking about doing is doing this adjustment here. If I can get this for like 50 cents. And so what that would do would give me a worst case scenario of $5, 5 big bean burritos. So it's a floating trade. I can't lose, risk free. Then I have these structures here, and then if I want, I can continue to. I could work my normal what's it called? My normal trade, the look-ma trade off of this. But this is something I haven't tried yet, so I may do this today just to see how that works and how it all pans out with this particular adjustment. So I think I'm going to do that. So I'm going to cancel this order. That's to buy back the hedge. And I can continue to monitor all these other variations throughout the day just to see what would have happened. But I'm going to see if I can get into this one. I'm going to say, I'm going to try to get 50 on that. So I'm going to let that work. It's showing 35. So I may have to wait for a bit. So I'm going to have that order working there. And then we'll just see if it gets filled. Right now we're up 50-ish bucks. We're down 16 points. Bless you. That's the joke meister. Hey, do you have any jokes for us, Connor? Oh, come on. Dad jokes? So we're up, I saw 70 there for a second. That's not too shabby. Bless you again. We're up 80 now. So let's take a look at it. What if we just took that whole unbalanced trade off? That's always an option we could do. And that would be this one. Oh, let me turn this off. So we could lock in 50 bucks. Maybe I'll try to do that. We can monitor all these throughout the day to see how each one would have turned out. But this one looks like I might be able to get. Let's see if I get. Oh, these prices are still bouncing around quite a bit. So if I could get $1 or better for this, let's see if I can get 115. I'm going to close this for a second. So that's working. I'm going to change that to 110. This trade is still in the developing experimental stage. So typically what I do with these every day is just try different ways of adjusting, different ways of entering, just to try to dial in like what I like the best. So that's what this is today. I'm going to try this. It's bouncing all over the place. I don't know if we get filled. Let me go to $1. Okay, so I'm gonna let that sit there and work at a buck. We can get this for $1. That'll give us a guaranteed profit of 55 bucks, and then we have this big mountain here where we make up to 555, and then I can just let this thing be done, or I can start to work my other trades off of this. And we can continue to monitor all these other potential adjustments throughout the day just to see what would have happened if we would have taken each one of these. I think this should get filled any second. You can see that if we're up to 80 bucks now. It's still bouncy though, it's bouncing around. You can see if we were to come down here right now, the best case scenario is with the pink line here is like 120-ish profit. So I'm going to pause the video. I'll let this thing sit here and work, see if I can get filled on that. And I'll be back. Okay, so I just heard that chime, the Thinkorswim chime, which means we just got filled on that right there. So they got filled for $1. So let me lock that in. It's going to be this. Wait. Okay, so there's our current trade. So now we have a guaranteed profit of 55 bucks no matter what happens. We go to the moon, we make 55 bucks. If we were to crash and go down all the way to, if we, from this point right here, all the way to 0, we could make up to 555. But this is now a levitation trade. This is now a guaranteed winner no matter what. I can't lose. And I could close it right now. I could close this leg right now and finish out the trade. Let's see. So that's the hedge. If we were to remove that hedge, let's say analyze opposite order. This is saying I could sell it for about 45. We could walk away. We could lock it, close the whole trade down for about 100 bucks profit and be done with this one. Or I can just let this thing run. If we continue to move down, I can make up to 555. Or if you see the pink line there, you can see how it just continues to slope up. So I could make whatever that white number says at any point up to the slope up. It's 270 there, 250, 200 there. But the absolute worst case scenario is if the SPX turns around and moves up, at least no matter what, I'm guaranteed to make 55 bucks on this. Essentially for just sleeping. This is the overnighter, the sleepover trade, which isn't too shabby. And so then again, I could the other thing I do is I could continue to work I could start to work my regular daily trades, my look-mod trades off of this with a built-in profit of 55, which is great. And then just continue to work it out. Continue to work that out all day with a built-in, not only with a built-in profit of 55 bucks built into the trade at the start of the look-mod trade, but with this huge mountain here, this heads to the downside, we're gonna make 555 bucks if it were to continue to move down. So that is the sleepover for today. I'll continue to monitor these other potential adjustments I had lined up throughout. Let's just take a look at them real quick. So first of all, let's just look at the regular trade. Here's the regular trade right now. You can see we're inside the tent. This is showing the potential profit of, it's bouncing around, but I would say 130-ish, 120, 130 bucks probably. If we were to move, is that right? Oh yeah, I guess so. That's gotten really expensive. So this is this side right here. If we were to remove those right now for $1.05, typically, usually I get those off for like 5 cents, 5 or 10 cents. Right now they're showing, well, it's bouncing around, but say $1. We could do that. I don't like that though at this point because we just have this $295 worth of risk here. So there's that one. There's this, which isn't looking so desirable at this point, just because we've moved into the tent. If we were out here, both of those two would look really good, but there's just too much risk now on this side, so I wouldn't do that at this point. Let's see, what's this one? I would not do that one at this point either. But I'll continue to monitor all these throughout the day to see how they pan out. If we were to close this is what we did basically. We closed the entire structure and just left the hedge on. So that's our real trade we have on. And then let's see what this one is. Oh, there's this one, which is we try to get this for break even and then have these three structures sitting there, two butterflies and this profit plateau to the downside. So that's an option. That's a potential adjustment. And that's if we get rid of that hedge. Okay, so that's it. So let's just turn on our actual trade, which is this. Here's our real trade right here. Right. So I'll try to come in a couple times throughout the day and just look at each of these adjustments, just to take a look at what they look like at different points throughout the day, had we used them. But this is the one we went with today. Locked in our profit of $55 with further profit potential to the downside, and a great starting position for our Lookma trade if we wanted to start to build off of that with a built-in guaranteed profit of $55. All right, it's 7:19. Oh, 7:10. 7:10. I just want to do a really quick update before I post this video. So I started to, well, let's go back to where I left this trade off at. So this was the sleepover, the overnighter, and this is where I left it off at. Let me back up a little bit further. So here's the overnight trade right here. We were up in here. And then as we began to move down, you'll see in the earlier part of this video, I made this adjustment here, where I just closed down the main structure, locked in $55 worth of profit no matter what, with this plateau here where we can make a lot more if we continue to move down up to $555. But this is a guaranteed trade at this point. And then after I stopped, that's where I stopped the last video. And then between then and now, I began to start to build out my Lookma trade. And what I did was right here, I sold a call spread. Let's go to the charts real quick. You can see that we had this signal on our Lookma indicator, 30-minute signal. We got an indicator or a signal to go down. So that's a call spread. So I sold this call spread right here for 310, giving me this trade. Okay, and when I put this on, we were about right here. So you can see we've continued to move down. So at this point, I gave myself some more risk. I introduced more risk because of this trade. So at this point, the total risk was then $135. Worst case scenario, all the way up. But as we move down, I then put on the Lookma 2.0 hedge, and I used XSP since there was only one contract. This credit spread was a one contract, and because I only used one contract on this one, I used XSP as the hedge. I bought 3 debit spreads, 636, 637 for 48, and so it's giving me this position. So here's where I'm at right now. So in this trade, from here all the way up, I'll make 21 bucks. 21 bucks of profit locked in no matter what. So that's a winner all the way from here up. If we stay in this plateau here, I'll make 221 with this setup. And if we continue to move down, I'll make up to 721 up here. So the only risk right now is this little valley. Total risk on this is 100 and, let's see, what is it? 120-ish. Somewhere in that range. But that's not going to come into play. I'm not worried about that at all. I can get rid of this throughout the day easily. And even if I didn't, the worst case scenario was if I were to lose that amount, that 100 bucks, we would have to finish trading end of day right at the bottom of that. And I wouldn't have to worry about doing anything until like 30 minutes before, just because of the way that this pink line is like stretched and pulled up because of these ledges here. So that pink line, that pink line is not going to all of a sudden droop down to that little tiny valley until end of day. In this case, probably the last 15 or 10 minutes. So we'd have to be trading right there at the end of day for this to be a problem. But I can eliminate this risk very cheaply throughout the day, which is my plan. So that's how I turn these into look-ma trades, or how I morph them into them. I just start to build off the look-ma trades as I would any other day, except I have this initial trade, this initial sleepover already in place and already in profit, which just gives me a really good advantage. All right, I'll continue throughout the day to monitor these and show the different adjustments for the sleepover and also the adjustments for the entire trade, the look-ma married with the sleepover. All right,